Do you think we're just making too much about a potential recession this year? There are a bunch of surveys that have come out. PwC said most CEOs, 73% of them polled, were looking for a recession this year.
I think it's hard to know what is going to happen, and clearly I'm not an expert. What is true, though, is there are significant challenges when we look at the impact of inflation, the impact of the war, the increase of energy prices, the situation in China. Each of these things could drive for a recession. Hard to know what will happen. For all of us, what is important is to focus on those things that we can control. I think this is where we as CEOs can add value. And in our case, it's really about managing our cost while we continue to invest in the growth areas to position ourselves in the right way for whenever the economy will revamp.
There are a lot of moving pieces to this year, absolutely. As you frame out the year, what is the biggest challenge you're up against?
I think it's being able to do both because, as I said, we need to reduce our cost structure to be more competitive, but also we need to continue to invest in hybrid work, we need to continue to invest in gaming, in consumer services, and balancing that is the challenge we have, but we are optimistic that we will be able to do both and position the company for the future.
Speaking of cost reduction, you've made a big move. To reduce 12% of your workforce. How hard is it to make a decision like that at this point in time?
It is always very hard because anything that has people implications are probably the hardest decisions we have to make as executives. But at the same time, they are the right thing to do for the success of the company. And what we need to do is manage them in the right way for the employees while we execute them for the future of the company.